Okay, let's get started with the real estate agent questions. First of all, Howard, can you introduce yourself and explain your role as a home lender?
Sure. My name's Howard Allen Lee, and my company is Long Ridge Financial. I have a DBA called HAL Lending, which is my initials. It's been many, many years in the making. I have been through many different markets and many different genres of the lending industry, and I find that as a broker, I can really get the best deal for my clients. I have over 30 different lenders to choose from, and it gives me a potpourri of what I can offer to a client.
Yeah, that's been really big for me. It's not like, hey, this is just the company you work with and that whatever they have. You're a broker, so you're able to go out there and find the best deal, whatever that means for the particular client.
Yeah.
And that's a huge benefit. Why aren't all lenders brokers? Seems like that's the best route.
You know, it's interesting you ask that because I did work for a savings and loan at one time, and I owned a mortgage banking company, and we did our own funding, our own loans. And for me, it was more, my job is to originate loans. So whoever I was working with or working for, I'm originating loans. And I saw an opportunity back in the late 90s to do it for myself, to lower my overhead so I can offer the best client, fees, etc. And also, it also broadened my ability to look at reverse mortgages, look at, purchase money, refinance, jumbo, all the different types of loans that I can offer. I have an expertise in all those fields, so why not utilize them?
Yeah, and that's what's best for the client at the end of the day, right?
Absolutely.
So you were in Los Angeles area, and now you lived in Coachella Valley for the past few years. And, most of your clients are in Coachella Valley now, or are you still kind of work in Los Angeles?
I have I was many decades in Los Angeles and moved out to the desert in 2016. And lo and behold, I couldn't believe the difference in the marketplace. People in the Coachella Valley are actually really happy. No, it's different kind of a stress level than working. I was right in West Los Angeles where the Hollywood crowd and business managers and accountants, and I love dealing with those types of individuals, but at my stage of my career, I wanted something that was a little more low-key that could have really great service as well, and people are so receptive and appreciative, which that's the thing that's always made my business wonderful for me. It's the satisfaction of the customer. Because the money follows, the income follows, and but
value, and not just for the people getting the loan from you, but for me as the real estate agent, I was just so blown away instantly, not just by your charm, but by your level of customer service for everyone attached to the transaction. Down to the other realtor because they have to sell their house. You're calling that realtor. You talk to everyone if you have to, which I do too, but it was so cool to have you working with me.
Well, real estate, it's not just one transaction. There's a domino effect.
Especially
There's a buyer and a seller, and that seller is going to be buying something else, and that seller is going to be buying something, and it just goes down the road, down the line. So communication, I believe, in any relationship, be it with my wife, be it with my realtors, be it with my mother and my father, it's really important to have great communication, and that's where I want to stand above the rest. Why not inform everyone? If I inform the listing agent, they can inform their seller. The seller has, give them my phone number, I'm more than happy to talk to them, but it's a matter of they can communicate the information, what's going on up to the minute updates, and it works really well.
You cross your T's and you dot your I's.
Got to.
Which is what's necessary to make sure nothing goes unnoticed. Okay, what's our next question for you, Howard? What are some common issues in transactions involving real estate agents, and how can they be avoided?
Okay. Issues that can come up during a transaction. I'm dealing with one right now. It's pretty incredible that people they have bank account A, bank account B, bank account C, investment account. They can't move that money back and forth without notifying us because everything has to be documented and verified. So one issue that can come up would be transferring of funds. So how can a real estate agent help me or work with me on that is let your clients know that, hey, when you get into a contract, don't go buy things, put it on credit card, don't get a new car, don't move money around. Talk to your loan officer before you do anything, and that's a great thing that a real estate agent can inform the client. And then, of course, me as the or any lender will back that up with, the step-by-step.
Yeah, that could break
approach.
the transaction.
It could cause delays for sure.
Yeah.
It can change credit scores. And then all of a sudden you have one credit score and they run another credit report at the end of the transaction. Like, oh, here's something else. So you have to be fluid and flexible, but you also have to be transparent in my communication to the realtor. If something does come up, you get on it right away, and then everyone can inform everyone, and then,
again, communication.
Okay. Key.
What's like the biggest thing someone's done while you're in like the process of them buying a house, like bought a boat or something like?
Well, actually, it's more moving funds.
Just moving funds around.
I had one client that
suspiciously almost. Yeah.
Well, not even suspiciously. If you're using, let's say they're self-employed and they own a company. Oh, I've got plenty of money in my company. I'll just throw it into my personal account. Well, that's fine. It's allowable, but you also have to get a letter from a CPA saying using business funds will not affect the overall health of the business the funds are taken out of.
Oh, yeah.
And it's fine to do it, but it can take a day or 2 or 3 to paper trail it.
Yeah, little things.
Little things.
That's great to know.
Yeah.
How important is the agent's role in helping clients understand the terms of their mortgage?
Everyone's got their role. The escrow companies have their roles. The selling agent has his roles. The listing agent have his roles. And then the mortgage person has their role. So in that question, I would say you don't want to do too much of that because that's the loan officer's job. My job is to help you focus on one thing, what you do best. That's sell real estate. If you're a realtor, that's your job. Sell real estate, keep your client informed, do what you need to do. As far as what can happen in a loan, that's my job to communicate to the borrower and to the agents.
That's something I learned early on in my real estate career, is to not try to do not my job. It could get them into a lot of trouble. And, I do my best to try to not just shoo them off. I try to give them a general summary, but just say, please go, let's talk to Howard. Let's bring Howard in to, polish off this idea or question you have.
And the one thing I will say, we go back to, once again, to communication. It's not call Howard and Howard takes 3 days to get back to them. That would cause utter frustration. It's a matter of, at the end of the day, I want all my calls made to my clients or any questions I have. And if it's at 8 o'clock at night or 9 o'clock at night, I have a very understanding wife.
Yeah.
And if I got to take care of my clients, I have to take care of my clients.
Yeah, absolutely. And that's customer service or communication, but that's where your customer service is on another level as well. You're great at communicating, but your service is excellent. And I really appreciate that type of responsive characteristics in you, because that's how I behave as well. So when I found you, it was just like, finally, this is someone that behaves like me.
Yeah.
And obviously someone that I want to become like as well. You trained me and grew me in your own ways, showed me how to be a better communicator and how to be better with customer service. But at the end of the day, that's the A player that I've been looking for. So I'm so happy to have found you, Howard.
Oh, thank
I know
you.
I tell you this quite often, but I really mean it.
Back at you.
Yeah.
I mean, I cannot tell you that. Anyone who takes a loan in my industry, getting the loan through should be what we do. But it's how you do it. How do you get the loan through? How do you communicate? Because if you could go to Nordstrom's and have Nordstrom service and say, wow, you bought a pair of shoes, but how are you treated? Same thing with the loans. It's like, you can go to another place that's got a rate that's 1/8% better, but they put you through the ringer and delays and just not take care of you the way you should be taken care of.
So my realtor friend TJ taught me that in real estate, a lot of the time, the average is about 80% of the realtors aren't the top producers, aren't the ones doing the right things. Mm-hmm. And it's hard because you have to deal with them on the other side almost 80% of the time. Is that kind of how it is with lenders too? You got to be really careful. You can run into that 80% that's not ready for you necessarily on all these variables.
Oh, they always say the top 20% do most of the business anyway. I don't even know if it's the top. I think it's more the top 10%. Actually.
I know. I'm trying to be nice on that 80%. It's probably 5% of the real killers, call them, that do everything at the way that you should.
Well, in my industry, the rule book's always changing. And it's keeping abreast of the changes, so there's not an issue.
People are sleeping. Yeah.
Yeah, you got to be on it
full time.
And that's why we just got through an election, and I can't tell you how many administrations I've been through, because I started this in the 1980s.
Whoa.
So I've been through the 80s, the 90s, the 2000s. It's been one learning experience every day. So I can say, don't stop learning.
Yeah,
in
for
life
sure.
with
Yeah.
everything.
Or think you got it. You think, oh, I've been here so long, I got this. No.
Yeah.
It keeps going. It keeps evolving.
It really does.
Which is what helps you keep you in front as well, because as long as you are always being responsive to the new changes, it keeps you ahead of everyone else.
Sure.
Which is nice way to stay as a top producer. Okay, how can a real estate agent and lender work together more effectively to streamline the buying process for clients?
So in the buying process, you have a purchase contract, and you want to stay within the parameters of that contract. It is a contract with date-specific issues that have to occur and have to be satisfied. So what a real estate agent can do to help me is at the beginning, right away, as soon as that contract is, everyone signed, okay, we're gonna buy this house. Sellers agreed, buyers agreed. Get the information for the escrow company, the listing, all the context in the transaction. You wanna get that to your lender right away.
Yeah.
That way, the next business day, I can jump on it.
Yeah.
Right,
Asking, oh, what's this? Where's that? Just give me all the info so I could run.
Right.
Yeah.
Well, because the days at the beginning are just as important as the days at the end, and always the extra pressure comes at the end when movers are scheduled and utilities are going to be turned on, and we don't want to be late. So at the beginning, you can save yourself a lot of of anxiety and headaches at the end.
Yeah, I've learned
if
that
you're
one.
on it at the beginning, and then once again, it's communicating. If something comes up, then my job is I report to you. Your job is to report to your client, and don't delay. Just do it right away.
Right away,
because issues do come up. There's homeowners associations if you're buying into a community that has a HOA, and we need to see, are they financially strong? We need to get certain documentation. The other thing is, pick your escrow companies carefully, because escrow officers some of them are brilliant and can really make the difference.
Yeah.
And when I see certain ones, it's like, I'm so happy. And then others, like, ooh, a little disappointing, but no judgment.
You got to figure out how to deal with it.
But have your team.
Sure, important.
As a realtor, have your team in place.
Yeah.
Your lender, your escrow. I love loyalty, and that's what I can say.
It's a big one, yeah. Just like having a lender is so important, having the right realtor is so important. The escrow is so important. They're navigating all the variables, so I got the whole package.
Yep.
And they're dealing with your clients and the other clients, other sides of clients, so important.
One other thing, this day and age, right now, insurance. Getting insurance, at least in California, a lot of companies have pulled out of writing insurance policies in California. So if I'm a real estate agent, I'm telling my client right away, speak with your insurance broker or insurance company, get that handled at the very beginning. So once again, there's no delay, and they can see what the actual cost is going to be.
Okay, yeah, that's a big one, and it's a newer one. So again, starting to memorize these new trends. Hey, let's make sure we're on this now.
Yeah.
It doesn't seem like some of them go away. It seems like it just keeps compounding, becomes more and more complicated.
Can be.
Yeah, but that's why you got to have a good system. That's why you got to be prepared with a template and get going right when you open escrow.
Get off to a good start.
Yeah.
Usually a good start means a good finish, and there's certain loans that I can get done in 2 weeks if I have to. I don't want to, but I absolutely can.
Yeah.
And just know your product that you're working with the client.
Okay. Now our second section's for the home buyers. We just talked about the last questions were all for the realtors, but this one's for the home buyers out there. What are the most critical factors that you look at when improving a mortgage?
Gets down to, I call the 4 boxes to check. Credit. Check it. What's your credit score?
Yeah.
Late payments, no late payments. How much do you owe on things? So we can calculate what you have to pay each month. So that's the credit box. The income box. That's another one to check. Once I know that, are you self-employed? Are you salaried? What is your salary? Is there overtime? Are there bonuses? You need 2 years, for example, for a bonus to be utilized. Are you working 2 jobs? Because if you're working a second job, you have to have a 2-year history of that second job. Salary. So there's just different types of income that I need to calculate. So once I check the income box, now I know the income and I know their other debts. Now, the third thing is we got credit, income, assets. Where are your assets? How much do you want to put down? Of your assets, do you want to put down X amount? Do you want to put down the least amount to buy and leverage get as much of a loan as you can for tax reasons? So we need to discuss, well, where are you comfortable with the payment? Because sometimes what they qualify for is much more than what they want to pay, because they have their own internal budget.
Yeah.
Say, okay, you can qualify for $10,000 a month. And they say, Howard, you're crazy. I go, that's the client I love, because I know they're not going to overbuy.
Yeah.
They're not going to bite off more than they can chew. So once again, we'll discuss that once I have their income, once I know their credit, and once I know the asset base. And then the last is the property. That's the collateral on the loan. Is it a condo? Is it a single family? Is it 3 units? What is it that they want to buy? Are they going to live in it? Is it an investment property?
Yeah.
Is it a second home?
Yeah.
All those things can really affect the interest rate on a loan too.
Okay.
Your credit
Depending
score.
on the property type, you're saying?
Your credit score,
all the 4 variables.
property types, and size of down payment, the loan to value.
For sure.
Yeah.
So the third one on assets, someone told me recently, and this may have always been the case, but I didn't know, you can, because it's always hard with our demographics, they don't have the income coming in, but he was able to get a loan, or said he was, because of his assets.
Okay.
He used that as his income.
Yes.
Is that a new thing? Or?
No, there's asset depletion programs where I have a client right now who's got, very lucky man, bought Apple stock very early on, and that's turned into about $7 million. That $7 million is a formula that they will use, depending on which loan program. But that can give you tremendous income just on the asset to qualify. Then there's other types. If it's a retirement account,
you taught me this one. It's like 20%
there's
or something?
there's a Fannie Mae, Freddie Mac formula that's different than, let's say, a jumbo loan. So it depends on what loan they're going for, but you can utilize, if you're retirement age, over 59 and a half, you can utilize an IRA that you've worked so hard to put money aside your whole life. Then it can start working for you as far as how to use it to qualify for the mortgage. You can set up ongoing distributions, and they'll add that income to your, let's say, your Social Security income. And between the combination, now you can qualify.
Okay, got it.
Super important, though. That's why knowing the assets can be a game changer.
It's a really simple process, though, when you break it down like you did in those 4 variables. Okay, next question. What are some common challenges buyers face when securing financing, and how can they overcome them?
Okay.
Like credit score?
Well, credit score, that's interesting, because how much of a line of credit you utilize can affect your score. I'm sure that everyone who has these alerts on your credit, it's constantly changing because, oh, I just made a purchase and I have this one credit card that's got a $10,000 limit. But now I've used more than half of that. My balance is now $5,001. So it's more than 50%. That could drive your credit score down temporarily, because you can go and pay some of it off, and all of a sudden your credit goes back up. Now, when I'm doing a credit report, that's the scores I'm using. Those are the balances that I'm using. But I will also get what's called they do a modeling of the credit report. And if I need the score to be increased to get a better rate, something that's better for the client, not better for me, because I can get the loan through. But what if I can do something that takes a little time but can really help save, $1,000 or $2,000 or a lower payment, because they took the time to say, hey, let's go pay that credit card down, and I'll get it's called a rapid rescore, get your credit score up, and now you've got a better loan. If we have time left in the transaction, those are the extra steps you need to take to get the best pricing, the best loan for your client, but you have to have time in the transaction to pull that off.
And a lot of times you should probably do that before the transaction, right?
No, sometimes it's during the transaction, because the credit score is constantly moving.
Oh, yeah. You should probably, before you get to the transaction, try to polish these things? Or?
Well, you can, but people still have,
things are going in real time.
Your balances on credit cards are constantly changing, because you might have some auto payments that are going.
Yeah.
But do not, we discussed this earlier, during the transaction, do not go and buy anything.
We talked about that,
raise your
Makes sense.
balances on credits.
Seems
credit
silly,
cards.
but if you're not thinking right, then it could happen.
Yeah, you don't want to have a credit report rerun at the end, and all of a sudden things have changed.
This is kind of attached to our next question. What credit score do buyers need to qualify for your best rates?
For your best rates, you want to be north of 700.
North of 700.
The best would be anything over 780 is phenomenal. People should be proud of that. It takes a while to get there, but 780 or above, you're going to get the best of the best of the best. But to get a loan, if let's say it's an FHA loan, they'll work with people that, maybe haven't established that long, and they have a 620 credit score. That's about the minimum that I've seen, getting a decent loan. But that would be an FHA loan. And some lenders might go down to a lower than that, usually not my clients, but doesn't mean that there isn't hope. I have a motto. I think it's the coolest thing. I learned this years ago, and I definitely embraced it, and that was, everyone's approved for a loan. It's just a matter of when. So if you have credit problems, over time that will heal. Or if you're saving up money for a down payment, over time you'll save money.
Better quality.
I love giving first-time buyers a plan, and if they execute the plan and stick with it, so you're putting $500 a month away. Keep doing that, and in 36 months, look how much money you've saved.
Yeah.
So people do change their qualifications over time.
So generally answering this question, 20% down with above 700.
Oh, you're done.
Good to go.
You don't even need 20% down.
Don't need it, but that's probably going to get your best.
You can go with 5% down if you have good credit.
Good credit,
You can go as little as 3% down if you're a first-time buyer.
All right. Can you estimate all fees included in the loan process?
That's a tough one because they're very fluid depending on. A lot of loans you get with 0 points or close to 0 points for my clients. And so if you did a 0-point loan, your overall cost for a loan is going to be, I would say, in the $2,000 range. So it can go from as low as $2,000 up to as much as you want to pay. That's for the loan part of it. But then you have your escrow fees and your title fees. And you have your real estate commissions, and you have your insurance premiums up front. So I think if I could give an estimate, I would say save 2% of your sales price and you should have plenty of money to close. So if you bought a place for $500,000, you take 2%, which is $10,000. I don't think your closing costs would be $10,000.
2% is a good rough
I think it is.
rule of thumb. Yeah, I've heard that one before.
Yeah, I think that's a fair number.
That's good. That's not too bad even. Okay, our last question, Howard. What minimum down payment is required for your loan programs? We already kind of answered this. And do you offer any options for buyers with less than 20% down? You already answered that. So
we'll just focus on that one.
Yeah.
So you can go with conforming loans, you can go as little as 3% down. FHA loans are 3.5% down. VA loans, if you're a veteran, I thank you very much for your service, you can go with nothing down.
Wow.
Yeah, 0 down.
Hey, give me a house. All right.
Yeah. If it's a second home, it's a different animal. If it's an investment property, different animal. So with buying your own primary home, you can get as low as 3%. I've even sometimes seen it go to 1% with special offers that can come and go.
Usually first-time buyer.
It's not even that. It's when lenders aren't doing a big volume, they might get some deals where they'll have a grant where they can give 2% of the down payment to the buyer. And the buyer comes in with 1%, so there's a total of 3.
Oh, I see.
It comes and goes. I wouldn't count on that. But the 3% down is here right now. Your 3.5% for FHA is always going to be there. And there's pros and cons to FHA compared to conventional financing, which I won't get into today. We've always been taught 20% down to avoid mortgage insurance. But mortgage insurance is now extremely inexpensive if you have good credit. So I'll give my client an option. Say, okay, you can put 20% down. Here's the numbers with 15. Here's the numbers with 10% down. You choose. It's their life. My job is to guide them to do what's comfortable for them.
Yeah. Let them make the educated decision, and I've always appreciated that with you. You've even turned away 1 or 2 of my clients because they had some premium offering from their their bank offered them. I was like, wow, Howard, you're a really good guy to shoo them off. It was so rare. Obviously 1 or 2.
It's fair.
But she had a 0% interest rate or something.
Yeah, there's some deal that they get out there that's real. I'd be saying, go for it.
Yeah.
Go get it.
And that's what we do in real estate too. If someone says, well, our friend will work for this. It's like, if you can get that and they can provide the service like us, then you should take that deal. But at the end of the day, the prices are there for a reason.
And interest rates are in constant flux throughout the day. Up and down throughout the day. So you say, You know, if someone asks me what a rate's going to be tomorrow, I'll look at them and say, you tell me, because I only know right now.
Wow.
And until that loan's locked in, you can have midday rate changes where I told you a rate now, and by the time I went to lock it in, it's changed.
Yeah,
So
communication.
Until I get a confirmation of your rate's locked, here's what it is, you know, you're golden then.
Well, Howard, thanks for coming over to the ranch and interviewing me, or let me interview you. I think you did a great job. So much I've learned today, and we'll share it with the humans on YouTube.
Yeah.
Is there anything else you'd like to say before we
No, if you ever have any questions, please don't hesitate to call.
Please call Howard.
Please call Howard.
You will not regret talking to Howard.
Yeah, it's, you know, once again, when you do something for a lot of years, I can't even think about the word retired. To me, I would be so bored.
Yeah.
Now, it's not always about money. I mean, loans are about money. But my compensation is based on just taking care of people, and the word spreads.
You grow through the transactions. You know?
If I like to say anything, is I tell people, look at my Yelp reviews.
Okay.
Because that's what people are saying about me. It's not what I can say. I can say about myself.
I've never seen those, Howard. I'll embed those on my landing page.
You know, I'm not really happy with Yelp because there are like 60 reviews of me that are not recommended because I don't know why. But there's a lot of them that are. So you can go through the ones that are recommended by Yelp and the not recommended, and you'll see for yourself.
Great.
I think you'll see a common theme of just going the extra mile, just being there when someone has a question. And sometimes you need your hand held, and sometimes you don't.
That's the thing with you, Howard. You're the real deal. You don't really have a digital skeleton, which is why I made sure to bring the cameras today to get you out there, because you're such a killer. Like, you're an A player. You're so hard to find. A lot of people are looking for you, and I'm trying to make sure they find you. And I'm really grateful, and our entire real estate team's very grateful for your services.
That's more than money to me, I'll tell you that. It really is. And here we are around Thanksgiving time, so be grateful.
I'm very grateful for you and everything going on.
I'm saying everybody out there be grateful.
Thank you, everyone, for coming on the show, Howard, and we'll end it here.
Sounds great.
Okay.
Thanks, Mark.
Great job.